Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. It is Friday, December 2nd. Can you believe it's December already, Barry?
I can't. I really can't. I'm not the guy to ask.
Right. My
We
name's
look at
Ben.
we look at market charts and time all the time, but I just can't. It's really hard for me to get used to that.
First time listeners, my name's Ben Maldonado, and my partner, who you just heard, is Barry Hederachi. Everybody else knows this and is probably sick of our voices, but we're recording here on Friday evening after a tumultuous week. So let's dive into it. Barry's going to do the big six, which is the ES, bonds, gold, crude, copper, the dollar, and the euro. And I'm going tonight. A lot of the commodities popped up, so I'm going to also hit on gold, silver, copper, crude, nat gas, sugar, cotton, cocoa, coffee. So we have a busy show, and we'll start off with the most boring chart in my set right now, which I never thought I'd say, and it's Bitcoin. The big thing Barry and I were talking about is, damn, these squares are good. Look at that half square.
Yeah.
Like a rock. 3 times we've tested it, 3 times we've held it. We're starting to push up a little, but this is Deadsville, man. I don't know what it's going to take to get this thing going, but right now it's dead.
And look at that 8th line right above, and look at the overhead. So
yeah.
We'll have to see how that goes.
Yeah, I mean, it's this we need to see either a plunge or a thrust up and then a pullback to really be interested and get involved here. Otherwise, it's just, check in on it every week, check on it during the week, see if anything's happening. Otherwise, move on. There's nothing to trade here.
Mm-hmm.
But let me throw it over to you because I know there is a lot to trade and a lot happened this past week. So let's take a look at what you see. There's the mini.
Mm-hmm. The rascal.
Man, look at that bouncing off the 90 right there.
Mm-hmm. Well, and the bounce off the 39.40, right? We went right into that.
Yep. Right into your level.
Let's get started with this. Well, if this is the first time, I would say to, take a look at the some of the older episodes, like last couple of weeks or 2-3 weeks, so you can catch up, because we sort of cover different aspects at different times, like what happened around the corners here, what happened at this high. So those things, it's good to know because it's part of the ongoing story. And
it's like a soap opera, huh? You got to watch the episodes.
It really is, and it really is, right? I mean, that's what a chart is. It's just telling a story, just one bar at a time. So it's I like that. It's a good way to look at it. And if you guys like our work, please remember to hit the likes and share the links, and maybe subscribe and click the alerts and do all of those things to help us grow.
Yep.
Bigger audience would be, I guess, more the merrier, right?
Yeah, sure.
Moving on to the E-mini. Let's see. Last week I said this 39.40, and we had a bracket, right? 39.40 and 40.38, and leaving that 39.40 being the key pivot, and that if we can hold that, we'll be stronger and we'll be able to test 40.38, and probably if we get above that, test the 90, and eventually 41.40. And if we can do all of that and settle above the 90, then there's a good shot that we're going to go up and check this high that we made back in July.
Man, what a call. Look at that. Early in the week, 40.38. Middle of the week, 39.40.
Right.
End of the week, we're up to the 90.
End of the week, I think this was really interesting to come back and sort of flush that out, right? So we'll talk about that in a little bit. Well, for now, what I'm seeing here is we have this nice big consolidation right in the middle. We put a lot of time into this, and look at the force it took to break out, right? It took that little fade and then bam, right up on top of it. We definitely, more or less settled above 40.38. All right. We didn't quite have the juice to get above 90, but we did the 90-degree point, but we did get above 40.38. So to me, this is definitely on firmer grounds now. And more importantly, what happened was this high, we kept talking about this high, just like we talked about that low back in September, and how this was a false break. And, if you counted off of here, it all worked out. And this high was really, it was an important high. That should have, if we were going to get another counter trend right away, this was the place to do it. Yeah. And we, as soon as we had the shallow pullback, couldn't take out 39.40, it was starting to give off signs. And, we talked about the last couple of weeks, and it hung in there. And this goes along with our whole principle of holding above or below, right? So here we held below, but we really didn't drop. It's kind of sticking to the, it's kind of sticking to the 90, basically, sort of hanging in there. So we broke about 40.38. This, it's on firmer ground now. And if we can clear the 90, I would say it's going to be bullish. Now, if we don't clear the 90, let's say 41.10, I mean, it's right in there. Let's just say 41.10 for now. If we don't clear that, let's say next week, I think we're probably going to get in here and chop, maybe have a narrow chop session or some kind of a more shakeout kind of a move. And if we do clear it, then clearly, we're going to take 41.40 out. And if we take that out and we're settled comfortably above the 90-degree mark, then I would expect it to go up and tap August 15th high. So that's pretty high,
Another couple hundred points. Yeah.
Which is quite a bit. It's a hell of a thing to say, but you got to call it like like we see it. And that's kind of the setup, but it has a lot of work to do. Not like it's a free ride.
Yeah, my daily square, the full square on my daily is at 40.70, so it's all right in here where it's trying to figure out which way it's going to go. So,
yeah, I think this high, either today's high or Thursday high. I mean, I could say today's high, if we take it out and kind of settle above that, which looks kind of obvious. But coming on the back of this 40.38, that's, you can see how we are stepping through all these levels. So it's that's the thing to watch. So next week, that would be it. Watch Friday high and Thursday high and 40.38. That's it. If we can hang above all of that, then we can probably grind higher. But because we're caught at these key levels, I mean, these are pretty close together, right? Yeah, it's a 100-point spread, but it's still, we got three levels pretty evenly spaced out. So when the market gets into these things, it could easily chop also. So watch for that. And the only other scenario I didn't cover was if we somehow drop below 40.38 early on, Monday, Tuesday, then I would say the grind is going to go on within this bracket. And for some reason we take out 39.40 at this point. I wouldn't think we'd miss anything, because if it takes it out now, I think we have new lows coming. So, kind of how the cycle works. So for now, we're leaning on a couple of things. We had this low come in really well, and we had a good cycle high here that should have turned it. And the fact that it didn't means there's a bigger cycle that's working, which means it has more to go. And the more to go doesn't mean it has to go straight up, but you can see how even if it's a sloppy bullish leg here, it is making higher highs and higher lows. We have to respect that. Let's go and take a look at the weekly. So weekly, we have the square of 52 working here, and we talked about this, how we had to, if the market was weak coming off of this cycle low, we wouldn't be able to get above this 52. We'll stall out somewhere below that and turn down to finish off this bigger cycle, right? The fact that we couldn't really, we couldn't pick a side for a couple of weeks. We were just going back and forth, which is kind of a sign, right? And we were well above this 38.96 we had marked off, and it was making higher lows basis weekly. You can see these higher lows right there. So, that all points towards bullish, and we finally got that break, but it didn't break the trend line quite. So, let's wait and see how that goes. But for now, it's like I said, it's firm all around, and we'll have to see how that works out. Well, this is the daily chart I used just to show that this is where the square came in, and how you can see how we just kept bumping up against it while making higher lows, right? Low came up the low, bumped up higher low, and then we took off, and now we're above the quarter of that square coming off the low, right? So so it's, it's on firm ground, which I would say coming off the low 90 would be the target, which is 42.15 or so. And if we go off of this low, then you can see the half still held pretty well. So, it could work itself up. We'll see. Yeah. Let's move on to bonds, which is having a good time. All right. So last week, well, we had, like I said, you guys check the last week's episode, the last couple of weeks. Last week was kind of short, but we talk about all these lows and what happened and the degrees down. That way we don't have to bore you every week and just cover the important things. Anyway, we got above the 270, which was a key level we were watching, and we said if it gets above that, then it's probably going to go up and test this 132 area. First a quarter square. So it's doing all of it step by step. And it looks like we can probably get to 132 to test that out. And that is kind of a good level. We had these old lows there. We had a nice bounce off of that. And that's what we're looking at. Let's see how that works. There are some other cycles coming up for the bonds, but we'll cover that another time. For now, yeah. We're looking for it to at least go up and test 132. And I can tell you one thing, this bottom is not going to hold for long. So it's just a matter of where to get positioned on the next leg. And we'll see where that comes in. For now, just watching for that bigger move. We're trading this as a counter trend. And looking at the weekly, well, getting right up into the quarter square, around 132.5 or so would give us equal legs here. This leg, June to August leg would even up. That would be exact next week, so that's going to be interesting. And that would be a good spot. Everybody, it's almost, and bonds trade like that. But bonds are really nice to trade. So let's look at that, and we'll see what happens. And if it all happens perfectly, we'll get a 144 would be high to high. That would set up probably a 180 on the next leg. And, so there's a lot more to go here. For now, like I said, we're treating that as an unfinished leg and a counter trend at that. Here's our friend Crude. There's a 73.50, our support, Ben. Held it to
the tick.
Pretty good. And then we ran up, and 83 held it. So we got a little bit of a bracket between 73 and 83. And what's wild has been, I've had these on here for months.
A long time.
And you know what they say, right? If it ain't broke, just leave it alone.
Trade it.
You trade it. And these lines are good. They're looking fairly good. For now, listen, under 83, it's not that firm. So I would say 83 is sort of the pivot to watch for next week. Even though we cleared the 144, it's not always that clean enough to trade, because this is coming off of a major low, over here. So it's okay. Like you can see the 72 was very active, right? We got this right in here. Look at that. It held it for months and months and months, right? Got above. Half worked out really well. Little triangle, broke it up. And here's a 144. So we're kind of messing around here. To me, if you look at this big, larger picture, this is just very bullish to me. Eventually.
Agreed.
By day to day, it can do all kinds of things. So we'll watch that. Like I said, it's okay here above the 144, what's the level here? Let's say 79 or 78.5, let's say. It's the 144 degree line. it's okay. But the bracket here clearly is this 83.73. And in here, unless you're day trading this, I'm not getting involved in this because I think there's some good movement coming up. So we just wait for that. Anything you want to add to that, Ben?
I'm going to touch on crude, so I'll just hold it up until then.
Okay, good. Clean up the charts a little bit, get all kinds of lines going. All right. Looking at weekly crudes, we had this 45-degree down. I mean, this would have been a good way to hold it, just break a little bit and then rally off. We didn't, obviously came back. Now, this could be kind of a false break. But it doesn't, I'm not quite convinced yet. It's a little too sloppy, but we'll see how it goes. But either way, this 45 is important, and we managed to get above that, and that 45 is around 78, same as that other number we were looking at. And we'll see how it goes. For now, it's a little bit of in mixed territory, so maybe some short-term trading is all I think it's worth, unless we take out one of those levels, right?
Yeah,
unless we take out 83, then we have to get active, or we take out 73. If we take out 73, probably got another $10 to the downside. So that's great. All right, moving on to gold. Gold had the 1730 area was their level to hold. We held that, and our next level on the bracket was 1814, kind of like oil. It caught the basic move, and gold not only tested the 1814, but it managed to close above the 72 coming off the high. So this is pretty good. Gold did pretty well today.
Agreed.
Being able to hold the 72 and hold the high here, the cycle high. So holding that cycle high, it's bullish, man. This is, I don't know what else to call it. And
agreed.
We had the false break down here, basically held these levels, got above and took out each level systematically, right? And came back to test, ran up. So now, like we always look at these things, if we take, let's say 1792, which is the 72-degree level down, and if we can hang above that, this is one of those, holding above scenarios. If we can hold above that, we'll eventually take this out and probably grind higher into, 1887 area to test that out. So the key level is holding this 1800 area for now. Looking at the weekly gold. And not much to say from last week, other than we talked about the 1767 being important, that, if we can clear that out. This is last week's bar was right under it. And we did a reversal, right? We took out last week's high. Very bullish, everybody jumped on, and here we are. So basis weekly, if we can hold about 1767, we're in good shape. And basis weekly, the real level to test would be this 1881, 1919 level. So looks like gold is kind of surviving for the moment, right? Just when I thought it was all over, it just managed to recover.
It's it's waking up. It looks like it's
and it broke the trend line, and it's doing all the right things. It had a 1 week, had a 1 week pullback back up. So technically it's doing okay. If you guys trade, we have a lot of people watching the S&P segment and the indices and the NASDAQ that Ben does. But if you guys want a little bit more coverage on other things, commodities or gold or bonds or crude, let us know in the comments and we'll put a little bit extra time. Otherwise, we can only look at the numbers and see where you guys are spending the time watching. So after gold, let's take a look at copper.
Looking good too, isn't it?
Looking good. We're making, after that 330, 340 clearance, the 230 was first, 340 was here. And last week I talked about, holding above these highs, and I didn't drop a line. I don't want to put a bunch of lines in here, but there's basically line was right in there. And you can see we held. So technically it's unfolding nicely. Now, if we take this half out, Ben, I think we can test 4.5 without any problem. I'm not sure when, but
I agree.
we could screw around up here. But if we can clear this, we definitely have the pathway up into the 90-degree level. So don't get your eyes off of copper at this point.
No, copper looks good.
It's winding up nicely.
Mm-hmm.
And looking at weekly copper, it's been looking, I mean, ever since this low, it's been looking okay. Right?
Yeah, just grinding.
Low came in, came up, held the 90, a little triangle here, broke it to the upside, came back. It's okay. Like I said last week and the week before, upside is okay. Just selectively trade. That's the direction.
Mm-hmm. This is the interesting one, because this is kind of driving the bus right now.
Yeah, boy, it's driving all right. It's like, hope it's got seat belts on.
But what a call on the 90 weeks, man, when you go to the weekly. Perfect,
yeah,
right?
Yeah, that was good. All right. So you can see how 90 week is no joke, right? I mean, what does it take to turn a huge market like this? Huge, right? And there it is. And that's why we use cycles and squares, because it just works out. Anyway, last week, well, not last week, ever since the high came in, we're basis daily, we're looking at the square 72. It looks like how the market wants to move through this square. And we were watching to see if 72 would hold, right? We were looking, as soon as the high came in, we were looking for to see if this held. If it fell, then we were looking for the full square. I mean, this is a good textbook example of that. Here's a full square. Okay, do we have enough juice to get up and try, test the half, or how much energy can we get off of this? It almost squared out, right?
Mm-hmm.
But it barely got a quarter of a square. So that's a sign, that little gray line right there. It just got to the quarter of the square, came back to test it. Next run up, there's our level 107.25, stopped it, and it couldn't hold above the square. We slipped under. So Thursday, Friday, we're under 72 degrees. So, I would say dollar is going to be weak for a little bit longer.
Mm-hmm.
And since it likes quarter squares, I would say next square would be around 103, 103 and a half or so. We just go quarter by quarter, but we know it's weak, and I don't have any cycles in here, so it should probably go in, at least test the quarter, if not 1/3. So we got a little bit of time to go, and we saw that coming, so it let it correct and finish this round off. It's going to need the rest, knowing what's coming later. So,
mm-hmm.
So it's okay. So here's the weekly dollar, and there's that the 90 cycle that came in that Ben was talking about. We broke the trend. Everything was textbook up here. Everything's good. And we did, we came to the half square, and it wasn't a clean bounce, or wasn't a clean break, messed around here a little bit, came back up to the 1/3 line right there and reversed. So, we have more to go now. And 104.5, 104, let's say 104.3 would be the 1/3. Like the daily's below the 72. This is below the half. So I think, it's to the downside for now, and let it unwind and finish it up. Looking at the euro, well, it was a mirror in the weekly. We'll see that in a second. But basically, the low came in at 288 degrees. We took out the half. We were looking for a test of the 216. We took that out. Then this was sort of the real test, was this grind in here, this box that we drew out. And we spent a couple of weeks in the box. Now, this is where you can figure out how the break's going to come, right? So in the box, you can see how we came down to 216, ran up, higher high, came back down, higher low. So as soon as you see that, and we start taking out the prior day's low, it's turning. Like, that's when you jump on your 4-hour, right, Ben? So the kind of, you have to watch, obviously, the price action here and the structure, see how it's working out. So now that is breaking to the upside. It's a half is the next place to check. Resistance is about 105, 106, let's say. And we have some other action in that same area, so looks like that's where we're going. And
boy, that breakout of the square and the pullback is textbook. I mean, that's what
Yeah.
you want to see.
Yeah, this is exactly, and you can see the higher lows, right? And higher highs, higher lows, and it's good price action, super low risk. Because by the time we got here, we already know it tested the square, right?
Yep.
And after testing, we made a higher high, and then we came back down and reversed. So this has some juice now, and I'm sure it has enough to just get to this little bit of 160, and it might even go higher. I mean, heck, the next section is up here,
Right.
108. So that's not bad. We'll see. We'll catch them both. It's just and here's the weekly euro, and 90 down from the high here would be around 106. So that's the area to watch now. And the reason I'm watching that is because of the 90 weeks, right? And we held pretty much at the half square. And, this half square here gave us some good action. So I think the 106 area is the next area to watch. And if you go to your left, you can see, there's a lot of stuff above, that we snap through. So we'll see how it goes. But I see that. I mean, that's would be a good normal place for it to find resistance. But you can see how, currencies can do big counter trends, eh? Look at this. Look at all these big moves on the way down. So it could certainly go more, but one thing at a time. So if you take this leg, for example, I mean, that'll put us right at the 1/3 up here. That's a big move.
Sure is.
And if you take this leg, that would be right at that the other lower 1/3. Yeah. 116, about 112, 120, 127. Yeah. So that's kind of what we're looking if the 90 goes, but let's see.
Right.
We'll see how it works out. Anyway, that's all I got for now. We'll go on and cover all the commodities. I know you got a full
plate today.
Full plate today, so let's go and take care of that.
Okay.
Well, NASDAQ's trying to make highs anyway.
Yeah. I mean, the interesting thing here, what jumped out me when I was reviewing NASDAQ was, for a week or more, we were battling. Then you had Powell's speech pushed us through, and it looked like we were home free with this bar, right? Because we had an entire bar above the full square, and then we had today. Now it remains to be seen, right? Can we print a bar, Sunday, Monday in futures that is full bar above it? Because that's what you like to see. I mean, like to see something like that right there at the low, or this here where we have the bar, it goes back above, and then the next few bars are all above that. So we want that's the all clear. This is still sort of mixed for now. It's progress. Because we were getting stuck below, so it did make some progress there. But the next couple bars are going to be real important, and the key level. And by the way, all these levels are in a Google Doc spreadsheet, which we'll post the link to when we post the link to the video, so you can see the levels. So this level here is now the critical level, which is 11,890. If we can stay above it, we can push up and get up to the 12,500 area. That becomes next resistance. If we lose this level here, then this structure here becomes a false break, and then we got to see where are we going next, right? Are we just going to chop around under here, or are we going to actually get some downside momentum and go back and test this half square? So it was definite progress. This Powell bar helped, and then today the recovery off the initial sell-off in the morning stopped at the 8th there. That was a good sign for the bulls in terms of, not giving up this full square. So we'll see. Anything else to add here on this, Barry, when you're looking?
Well, it's still making it's not as clean as the S&P as far as the higher highs and lows, and the structure goes a little bit sloppier.
Mm-hmm.
So, but it's still making higher lows. So let's see how it goes.
Yeah, we'll see. We know the marker.
It's definitely the weaker one. So
for sure. So 11,900, 11,890 in there is the key level for anyone trading NASDAQ next week. Watch that sort of as your balance point and your bull bear line. For the commodities, it's interesting in the chart review today. A lot of people are confused, and the charts are kind of showing that. Most of these commodity setups, as you'll see, they have a bullish tilt to them, which is why I want to show you, because big picture is bullish, and every time the setup is potentially bullish on them, I want to bring them to your attention. But they could also turn, right? If we turn in certain markets, if we lose certain levels, there could be another leg down. And then the bonds thing doesn't fit with what I'm seeing in the commodities, right? Which all the commodities that we're going to review have potential bullish setups, which would mean higher prices for commodities, higher inflation, and higher interest rates. But bonds, as you reviewed, Barry, are looking pretty bullish, and they should push up a little more into more resistance. So we're kind of in a confusing, fluid spot here, and which way it goes, we'll let price tell us. But that's kind of the summation. It's not like a full speed ahead like the message I've gotten sometimes, or hey, don't touch any of the commodities because they're all looking like they got more work to do on the downside.
right.
So let's run through and take a look, and you'll see what I'm seeing. Let's start with gold. Barry covered gold, and the only thing I'll add here is today we had a beautiful bar that pulled back towards the full square, held it, closed near the high. See how we failed there? Pulled back right into support. I mean, gold looks good. And gold, as you know, through the whole period of this year with all that inflation, this is what gold did.
Right.
So gold's doing something different. And the precious metals are a gauge of confidence in the system. So if we're seeing this in gold, while bonds are rallying and inflation is, sort of the rate of change on inflation is slowing down, or it's even coming down. What's this saying about confidence or stability in the system?
Exactly.
So that's what gold's saying to me. So that's gold. Let's jump over to gold's little brother. Even stronger, right? And I think the thing on both of them that we're starting to notice is, we've been talking about the higher lows and higher highs. The angle of ascent starts to go vertical right before these things take off. So you can draw your trend lines. Here we got it's fairly flat. Next one's a little steeper. The next one will be really steep. You get this sort of curl on the pattern, and silver's further along than gold. The key thing here in silver, we crossed up and closed above this full square. Call it 2266. And you can see as you look left, it was a place of highs before and lows back into 2021. So it's a pretty important area there. So this week we watch on any pullbacks. Can we sit on top of that? Can we get a full bar on top of this full square? Then we're heading up here. 2455. Get that, then we're back to the highs. 2650. So I like the sort of curving and steepening nature of this, the higher highs, higher lows, the stair step we're getting. I mean, look at this pullback. It's perfectly into support on the half square.
Right.
That's a bullish market. Anything else to add on silver?
Well, they're both looking like they're doing nice ABCs. So let's, if you're short term, you can certainly trade this. Looking good.
Okay, let's go to another metal.
Mm-hmm.
Copper. Barry covered copper. I just want to show you how critical the high is that we closed on today. It's full square. Right here, this is where we pushed up, tried to get above this full square, tried to go, failed, came down, did some crisscrossing of the half square, and now we're back up to test. Take out those highs, and you're looking at, like you were saying, Barry, $4 or $5 copper.
Mm-hmm.
So copper looks good. This is critical. How do we handle this 30, 86, 30, 88, 388 area?
Right.
That's going to tell you everything. If we fail here, it's back down, right? And then we got the half square again. We got to test, and we got to make sure, we're not doing an ABCD down that might get us down to here.
Right.
But it looks good. Again, steepening trend. We were starting pretty flat there. Now we made a higher low here, steepening. Take this out. It'll rocket.
Mm-hmm.
I know you covered copper, so I don't think anything else to add.
No, we're good.
Okay. Let's go check the energy stocks. Barry covered crude. Want to show you why crude's at a critical spot in my work. Got false break low this week. Took out any stops that were in here. And now we're battling here at this full square. So the key next week, 81, 81, 82. If you really want to be aggressive off of this chart, because we don't have a higher low, we don't have a higher high yet. Wait till we take out this high here. Take out Thursday's high, and you will create a higher low and have the ability to push up, into the 90s, those previous highs. And again, that fits probably right with your area. You were saying 83, right?
Yep.
83.34 was that high.
Pretty good.
Yeah. So crude, I like this low. I like the flush. I like the move out of it. Now we got to see, can we beat this half square? Can we get on top of it and create a higher high? And that should release the hounds on crude. Let's check out the Widowmaker. This thing is a Widowmaker, but man, is it harmonic. I mean, look at the turns on this thing when they come.
Right.
They're on full squares. They're on half squares. It really, really acts well. It does good with timing. I mean, look at the timing here. There.
Right.
There.
High.
It's really good.
And even the high, the lower high was right on the mark.
Right on the half square. So anyway, well, I wanted to show you this because we had this strong move out of the low, a false break low with this. Did a perfect ABC to the tick to the half square. A little over 8, around 817, 818. And now we have a sharp pullback that we close below this half square. Why am I showing you this? I want to see where this next low comes in, because where this next low comes in is going to tell us everything. If we can make a higher low from this cluster here, really bullish. If we even pull back to the half square or take out these lows and make a higher low from here, it's still bullish. So we're watching natural gas this week, the price action to see, okay, where do we end up getting this low? And does it give us a good risk reward setup, against a half square, or if it comes back all the way back here against a full square? Do we get that higher low off of this first thrust? This is a normal first wave up, right? ABC, boom. Now what's next? We don't know yet, but this is why you want to watch it. So nat gas, the Widowmaker, does operate harmonically, so you can use the levels to see if you get a decent risk reward setup. Anything to add here on nat gas, Barry?
No, I'm good. You covered it pretty well.
Okay. Now let's go look at the softs. This is an interesting one because of the length of this consolidation and the time we've spent going sideways. Sugar, I've talked about it, multiple times on our show here. Let's just run the story back a little bit. We had a false break low on half square timing. Nice move out of it, pull back, higher low on the half square, and then here's the big thrust, right? This was the big move. Look where it stopped. Tried to get up to the half square, couldn't make it, and now we're pulling back. So far, we're holding above this full square. The key thing for next week is, do we get a reversal that can take out this high and give us another higher low? That's what I'm watching, checking to see, because that could be the launch pad, so to speak, after this, first wave up, next move, next wave up, pullback's giving us another higher low, and then we can go. Because the break out of here should be pretty tremendous because of the amount of time we spent in this consolidation. The safe trade is wait till we push up out of here, pull back, and sit on top of this. Right? But if you drop down to lower time frames, you can see, like on the 4-hour, the setup here is fairly bullish, providing we get that reversal and take out that high. So that's why I'm really interested in watching sugar this coming week to see what happens there.
Yep. It was a good trade off the lows, came back to test the mid. So we're right there. Like we say, it's hanging on the positive side of the square, right? It's on
Absolutely. Absolutely. I mean, listen, all these things could turn, right? If we come back down and we take out this low and then we start, making lower lows and lower highs, you got to say, okay, wait. But the weight of the evidence right now is bullish on these commodities.
Mm-hmm.
So let's see. Let's go to the next one. Here's one that's had the crap beat out of it, cotton.
Right.
But look what it's doing. We called out this low, had a nice rally up, have pulled back and reversed.
Mm-hmm.
Here's your go point, right? Take that out, then you've got a low, a high, a higher low, and then you'll have a higher high.
Right.
I mean, this is the evolution of how a market turns bullish.
Mm-hmm.
And you're seeing different commodities in different phases of it. Like silver has done several higher highs and higher lows. Cotton is just now putting in its first higher low. Can we get a higher high? That's the next question here. That's the next test for cotton. The other key thing is, can we get above this full square? Call it, 9160, 9165.
Right.
When you look left, you see that was a place where there was former lows and there was a pretty decent battle in here.
Mm-hmm.
So I like the way this is going. Again, could it roll over here? We take out that low and then we go take out this low? Absolutely. Completely possible. But right now, the weight of the evidence is pointing towards higher. Mm-hmm. So we watch and then let price tell us when to get in it. If you're aggressive, you can get it when it takes out this. If you want to be safer, let it take out the full square, pull back on top of it, and then it'll go.
Right.
Anything else to add on cotton?
Well, I think that risk you're talking about, if we can clear that square right above, then I think that risk would be, much less.
Absolutely.
Mm-hmm.
This is the one that's been sleeping for years. I mean, years. I'm not kidding. 6, 7, 8 years. When we do the monthly show this week, you'll see how long this thing's been asleep. And it's starting to wake up, right? Mm-hmm. You had your false break here. Classic signal in commodities that, okay, fake it one way, everyone think it's breaking down, and then it reverses. So what did we get out of there? You had a high, pull back higher low, move higher high, another higher low. Closed on the high today above the half square.
Mm-hmm. Trend
line's getting steeper. I mean, it's doing everything you want a bullish market to do.
Right.
So the next key thing is, can we hold this next week? Monday, Tuesday, can we hold this half square? That's in the 25-20 area. If we do, take that high out. You could be off to the races here. Now, if you look left, this full square has been the site of much of this congestion, and we're still there. But
Right.
it's doing what it needs to do to show you something here, step by step.
Mm-hmm.
Okay.
Yeah.
Last one is the market that has the most work to do, but I want to highlight it just to show you early on what the potential could be for a market and how we track it to try and figure out, do we have is it changing from bearish to bullish? It's coffee. Been in a downtrend since February, the February high, accelerated here in this October, November timeframe, made this low in the half square, had a first push up, which stopped where it should on the full square. Now we have to see, do we get a higher low? If we get a higher low and reverse and can get above this full square, this may have been a low. There's some squares that it's squared out there on a 4-hour chart, a pretty nice square too, 180 by 180. So it's why I'm watching this. By no means can you just dive in and buy it, because we don't have a higher low yet. We don't have a higher high, but I want you to watch it, and we'll sort of start. We're starting the story here because there's the beginning, the introduction of the story is right here. You got a square, you hit the half square, reversed, got to move up, first pullback.
Right.
Does it give us a higher low? If it does, we got a shot. If it doesn't, it's back to the drawing board.
And also, if we take out today's high, then, gains back on, I think that could clear a lot of things up. Key thing is that today's high is very important. So.
Very important, not only because it's a high, but because it's that full square.
Yeah.
If you're looking at monthly weeklies, monthly resistance is at about 170. So you can see that's in here, in this area here. Weekly resistance is 165. So that's why this area is so important. If we clear this square and take out those highs, as Barry said, monthly, weekly, we're above resistance.
Right.
And then we can use that to sort of as a pedestal to sort of push higher. So that's it. It was a quick run through the commodities, but essentially what I was trying to show you is different markets in different phases, but all with very bullish signs and bullish potential. It doesn't mean you go out and you buy the commodities willy-nilly right now, but you watch the price, you watch the levels, and if certain things happen in certain markets, the risk reward is very favorable to get involved with these. So I'm going to be watching the commodities very closely this coming week. Going to be watching bonds because I think a lot of clues are going to come from bonds, the dollar, and we know that the risk markets are keying off of interest rates and the dollar right now. So those things will the tail wag the dog, or will the dog wag the tail? We'll see next week. What are you focusing on, Barry?
Well, the S&P for sure. Watching the bonds also, because we're reaching up into that resistance. Just keeping an eye on the dollar. We all have to at this point. Well, gold. I mean, everything's sort of like you said, knife's edge, right? Everything's it's either getting close to a turn or we're going to continue a little bit longer. So, and the ones that are continuing, we have to watch those and trade it accordingly. And yeah.
Pay attention to levels, man. Levels will keep you out of trouble and keep you from chasing markets and getting whipsawed, because there is a ton of whipsawing going on.
Yeah, levels and structure.
Absolutely. Well, listen, everybody, have a great week. Barry, have a terrific week, and we'll talk soon.
All right, good job, Ben. Thanks, and everybody have a good week.
Bye.
Bye-bye.